Good morning, everybody. It's Dr. Vibe here, host and producer of the award-winning Dr. Vibe show, the home of Epic Conversations, and I'm the host of Epic Conversations, 2020 Best Podcast News Award winner, 2018 Innovation Award winner given out by the Canadian Ethnic Media Association. I also co-host and co-produce the only online show for dads and fathers that's sponsored by Dove Men Plus Care. As always, I'd like to say you're blessed, highly favored, a magnet for miracles, and a solution for someone's problem. And you're watching The Morning Vibe on March 3rd. Yes, the first Friday in March is here. March is here. And if you're in the Greater Toronto, Halton, now they say the GTHA. They used to call it the GTA. It's now the GTHA. We're looking for some more snow. It looks like we're going to get another snowstorm within the week. So winter ain't done yet. So as always, I like to say you're blessed, highly favored, a magnet for miracles, and a solution for someone's problem. Hope everyone's doing fine, doing safe. Let's get some things out of the way as per usual. Please feel free to subscribe to the Dr. Vibe Show on YouTube. If you subscribe on YouTube, and also make sure you hit the notification button so it tells you that you're notified when the upcoming conversation is coming up. Like on Facebook, like on any platform that you're watching. We appreciate it and don't take it for granted. And as I mentioned, it's the first Friday of the month, and we have our first Friday man legend. I think he's already a legend on the Morning Vibe. Mr. Wayne Harris is now throwing the gauntlet down with Mr. Ray McMillan as the two sharpest, best people on. They even dress sharper than me. I got burgundy. I got a burgundy hoodie on. Wayne's got it full going. He said last time he was on, Ray, I'm coming for you.
Listen, Ray McMillan raised the bar, came out with a high standard. This is now my new normal. Thank you, Uncle Ray. Uncle Ray McMillan, thank you. This is my new standard for Financial First Fridays.
Yeah, well, you know what, too? I saw Ray. Well, I hadn't seen him a few months. He was at the ACBN Symposium last Friday. And again, there were some people who had seen Ray digitally.
Yes.
And they go, what? Like they go, yeah, they say, yeah, they see him on the screen and they see him dressed the same way. Same way. And it was really good to see Ray. And again, kudos to ACBN for a great event last week. Actually, I got some news that you may not know. A common associate of ours, Donna Grant, they had a pitch competition there, and Donna's sister won first place and Donna won third place.
Wow. Very good.
So just wanted to share that news to you. But so congratulations to Donna and her sister. Fantastic news. So what's been going on in Wayne Harris World? Isn't that your Instagram handle, Wayne Harris?
Yes, at Wayne Harris World. This is my Instagram handle, 100%. Life has been good. Black History Month was short, but very, very busy. And we had a lot of conversations with Black families about where they are, where they want to go, and how they can get there, some of the tools and tips to help them create generational wealth, put them in position for generational wealth. And if I can count on, count the number of times people said to me, this is the first time I'm hearing that. This is the first time I'm hearing that. You know what? I've never been told that. This is the first, really? You can do that? This is why I love doing what I do, because no one's talking to us. People have been going to their financial institutions for years, and no one is telling them anything other than, you want some U.S. money? Oh, you want some U.S. money? Oh, you want a checking account with lower fees? Oh, you want to earn 0.05% on your income? Please invest with us. Please save with us. Oh, it's RSP season, which it was up until 2 days ago. RSP season. It's fantastic. Should you have an RSP? Is that the right thing for you? Do you have the income to make that worthwhile? What else do you have going on, and where else could you put your money where you can make a solid return. And where do you do that? In a very tricky market. I wouldn't say volatile, the market's always moving, but when the market's moving, not everything is down everywhere at the same time, and not everything is
That's
up
right.
everywhere at the same time. People who are in that field know where the money is working for and against people and can put you in position depending on your time horizon on when you're going to need that money. You can look at the future and know that you're going to win over time. Over time, because we talked about the magic word last time, compounding. But today we're going to talk about the 5 areas of personal financing.
Just before you get there,
Hmm.
you mentioned that you spoke with a number of Black families last month. Through your lens, what is the state of the Black family through your lens right now?
Wow, great question. Unfortunately, it can't be answered because which Black family you're talking about? You're talking about 2 professionals with multiple university educated living in a suburb of Toronto or a better part of Toronto? Or are you talking about the family that takes the bus every day to a warehouse somewhere half an hour from their home and punch a clock in an ununionized environment? Or are you talking about the Black family that's a single mom who may be a professional, but because she takes income for before and after daycare and tutoring and all those other things, she's living check to check? Which Black family are you talking about?
That's a whole other conversation. So I'm going to pull out of that. I'm going to pull out of that real fast. So
Okay.
you wanted to chat this month about the 5 areas of personal finance. So let's go. Let's go.
Okay, let's go. Let's go. So the first area of the 5 is income. So to your point, which Black family are we talking about? Are we talking about the Black family who has a combined family income of less than $60,000, which is living very, very tight, paycheck to paycheck? Are we talking about that Black family has just cracked 6 figures combined income, but because they move up a marginal tax bracket, they bring home less than they were when they were making under $100,000 a year? But because they're making 6 figures, they decide that they're going to do certain things with their money, which brings us to the second category about spending. So the first one is income, second category spending, third is saving, fourth is investing, fifth is protection. So income. Do you know what it costs to live in Toronto these
Huh.
days, Dr. Vive?
Don't
What do you think
don't
it
don't.
costs to live in Toronto these days?
Well, it's actually interesting because I heard a report the other day that the
Yes.
average rent in Toronto is around $2,000 a month.
Yeah. Yeah.
So right there, you're looking. Let's round it up, $25,000. That's just a place to live. That's nothing. Eating, transportation.
Right.
So I'll let you answer from there. But when I heard that, I went, "That's more than I'm paying for my mortgage."
Right. So there's a gentleman on Instagram. Shout out to Jim Chong, who is not a financial advisor but does provides financial education. He says you need $240,000
Yep.
to live decently in Toronto without having to curtail your investment and lifestyle. So to save and retire and max out your RSP, max out your TFSA, raise 1 or 2 kids, you need $240,000 a year gross to live in Toronto. Now, that's a lifestyle that I don't know. I'll guess and say, educated guess, that 90% of the people who look like you and I do not make that income.
No, no, definitely not.
Right.
Definitely not. And
So we're living. Yeah.
I just want to add to that too. It, Raising a child ain't cheap.
Raising a child is not cheap. Some people say up to $350,000 to get a child to 18. Here's what I do know: Toronto, the most expensive city in Canada. We've now surpassed Vancouver, and we know this because there are a number of reports that say this. But the national average, we're 36% higher than the national average. So if you choose to live here in the GTHA, or if you want to include Halton, as you alluded to,
Mhm.
you need to bring it, or you need to find ways to bring it. So if you're going to have a job, ask yourself this: are there any Are there anything that you can't do to upgrade your skills to make more money doing what you're doing? So if you are a, I don't know, some kind of person, junior IT person, you're doing customer service, yet you work for a company that has positions that pay significantly better. Is there a way through internal programming or through third party like a college or a industry certification that you can certify yourself in that space, so your company that already knows you as a great customer service rep making $40,000-$50,000 a year, can you take these courses and get the sponsorship from your company so you can increase 40 to 50 to 60, 70? So let's look at home first. What can I do? Brian Tracy says, in order to have more, you have to become more. In order to
Mm-hmm.
have more, you need to become more. So what are you doing on a daily basis for you to become better so you will attract more money? Because you don't earn what you earn arbitrarily. You earn what you believe you deserve to earn. So if a man makes $50,000 a year versus a man who makes $500,000 a year, the difference between the two may, sure, there's economics and maybe cultural differences, but in the end, the person who makes 50 believes they should make 50, and the person who makes 500 believes they should make 500, and the person who makes 5 million believes they deserve 5 million. Income doesn't exceed self-image. So we, as a community, need to increase our self-image. And how do you increase your self-image? Well, self-image and self-esteem comes from doing something, learning to do something, and doing it well, which brings confidence, which raises self-esteem. So if you want to increase your income, do an inventory of what skills you have. What skills do you have? Some people are great oratorical communicators, great. Some people are great writers. Some people are great, with their body, right? They dance, they do different things with their bodies. Different types of intelligences. It's not just IQ, right? IQ is one piece of the puzzle. It's a big, strong piece, but it's not the only piece. There are 4 pieces to intelligence that I look at, and the first piece is IQ. Can you read? Can you write? Can you count? Good, great. Next, emotional intelligence. Can you get along? Can you get along? Right? When you hear about people saying, do you fit or do you fit in? You hear that? That has
Yeah.
nothing to do with your marks at school. That has everything to do with, do I want to have a beer with you on Friday after work on the patio? And we have a very short patio season in this town called Toronto. And if people don't believe that you're going to be the kind of person that will get on the elevator or come out of the building, walk down the street to the local watering hole and sit with them for a couple hours while traffic dissipates so you can have some chicken wings and talk over an adult beverage, they don't hire you.
Yeah.
They just don't. Next is cultural intelligence. What's the difference between a Bajan and a Jamaican? A lot.
Yes.
But but very little as well. A lot, but very little. But if you start talking about the capital city of Barbados is Kingston, and you start saying the capital city of Jamaica is Bridgetown, you're going to upset a lot of people because you have it incorrect. So this is cultural intelligence. This is the difference between someone from Runaway Bay in Jamaica and someone from Kingston, someone from Negril. Yes, they're Jamaican, but there are differences and nuances between the location. So we look at cultural intelligence, the difference between a Hindu and a Punjabi, the difference between a someone who is Sunni and someone who is Shia. They're
Mm-hmm.
both Muslim,
Yep.
but don't make that mistake, right? Just like if someone says, I'm a Baptist versus a Methodist, both Christian, but different denominations. If you can understand the nuances, you can win friends and influence people. And the last area of intelligence is network quotient, network intelligence. So IQ, EQ, CQ, NQ, network. Who do you know? And more importantly, what do they know about you? So,
That's the key. You see,
all
a
right,
lot of people, they see that's a lot of people just go on the first part, but
right.
it's the second part. What do they say about you when you're not around?
Correct. Correct. So people know vibe. And like I said, I can close my eyes and someone could give me a scenario about what Dr. Vibe did. And I will say, based on my body of knowledge and based on his body of work over the 30 years that we've been
Yep.
boys,
Yep.
that is out of context and out of character for Dr. Vibe. I do not believe it.
So I'd say the same thing with Wayne. Before we go any further, Rain, people are some of the families checking in. Divine Right says, blessings to everyone from the DMV area. Happy Friday. Fitness IQ Cam says, good morning, gentlemen. Ray, you see, you
My man. Thank you.
Right. Good morning, gentlemen. And now he's coming with facts. He says, quote, as much as 85% of Canadians believe that their income is not keeping up with the pace of inflation, according to a new poll by H&R Block Canada.
Right. Go ahead, keep going.
Fitness IQ counts. Most Jamaicans would say fire if that. LOL. Divine Right says, exactly. I dislike when people say, quote, Spanish people, unquote. That is culturally ignorant to say.
Fair.
So the families come in. Wonderful.
All right,
Family.
good. I'm glad they're here. So that's income, and we definitely want to increase our income. So when things are getting more expensive, one of the ways to solve for that is to increase your income. The other thing you can do is you can get a little side hustle. So if you're great with pets, hey, become a dog walker and go make that money. Hey, if you're great with food, go work at a banquet hall on the weekends and go do the waiting or catering and get that done. Find out what your superpowers are and weaponize them in a positive way for you to go out and earn income in an area where you would have done it for free. Like back in the day when I loved basketball, if they told me come and volunteer with kids to show them basketball, I would do that because I love ball and playing with the kids would be great. Teach them some things about the game, and I would get a workout myself, and it would be all good. But if you're going to pay me, City of North York, shout out from 30 years ago, if you're going to pay me to hand out basketballs, I'll take it. And it was my side hustle for a while. Then I became a basketball official, and that paid cash money. It paid cash money.
And the better thing too is you got in good shape.
Exactly.
And also too, to me, being a referee is one of the best jobs in the world because not only does it help you with the game, but also in real life, having to make decisions.
Right.
It helps you off the court. Sorry about that.
But no, I agree. Real time. So I'm looking for people to start looking at side hustles. Bill Gates says, don't confuse my former boss. Don't confuse how you make your money with how much money you make. I'll say it again. Don't confuse how you make your money with how much money you make. There are people making money in areas that they don't like, but they do it. Right? Today we're going to have a massive snowstorm in Toronto. Massive snowstorm. Guess what? People who have those little plows in front of their pickup trucks are making money hand over fist over the next couple of days. They're going to work 24 hours, but they're going to make some money. And most of them have contracts. And when it doesn't snow, they win. And when it snows, they work. But for the most part, it doesn't snow. So they win most winter times. And in the summertime, they take the plow off and they put the lawnmower in the back and they cut grass and do landscaping all winter long, all summer long. So you can make money. Think about something you would like to do. Go work retail, right? Nordstrom's is just closing all their stores in Canada, right? And to tell you what's going on. People are not spending, right? Because people know a rainy day is coming. So what happens is you stop spending. And when you stop spending, you cause a rainy day that you were trying to avoid because the economy goes in the crapper, right? So we'll see what happens there. But I want people to start thinking that side hustle is not something that people who are broke do. Side hustle is something you should be doing so that you can set up yourself in business so you can get the tax advantages of having your own business without all the overhead of doing something somewhere outside of your house. There are many things you can do in your home. Make sure you let your insurance company know that you're doing. I know people baking bread and baking cookies and doing this and black cakes and all that kind of stuff, and that's great. But if someone gets sick and you are baking that stuff at home and you didn't have the proper insurance for that black cake because you put something in there, your grandmother's secret recipe, and everybody gets sick and they remember that you're the one who cooked that cake and you cooked that cake in your home kitchen, not a commercial kitchen, and they sue you, all that you have is exposed for that 25, 30, 50 bucks you made for that black cake. So think about it. All right, let's get off of income. Let's move to spending. Go ahead.
Just before we got so people catching up on the families chiming in because they love you. Divine Right says cultural ignorance is a huge turnoff for me when I'm doing business and personal.
Mm-hmm.
Christopher Lawrence says good morning vibe and Wayne Harris. Ray says side hustle is key for many. Quote 20% of Canadians, totally approximately 8.7 million adults, to take on side hustles to boost their incomes. 20% have entered the gig economy in the last 12 months. Unquote.
Yes. Yes. Thanks, Ray, for bringing the kung fu. All right. What we're talking about here is Fiverr, all the different things you can do. There are a bunch of gig sites where you love to read, so you are a great copy editor. So go edit other people's content, create content. You have so many ways and so many sites built for people who can't commit to full time, but can take on projects bit by bit. Go ahead.
Well, even too, can anyone be if you're into the AI revolution, can you teach AI how to use AI to companies?
Right.
Like AI is
Tons.
the big thing. Like
Right.
there's a need right there because so many people don't have an understanding of it. And again, people, even high level, try to understand AI. It's already been around for years, but again, with Chat GPT, it's taken it to a whole nother level. So please,
I
please,
agree.
like teach. There's what I remember meeting Dennis Kimbrough many years ago, and he wrote his version of Think and Grow Rich. He called it Think and Grow Rich: A Black Choice.
I've read it.
Great book,
Hmm.
great book. And one of the things he says is, "What do you like to do for free? Because what you like to do for free is what you should be making some money at, whether it's
100,
main hustle or side hustle."
100%. So when we think about the gig economy, listen, back in the day, you would have to go take a course somewhere. You have to leave your house, get in your car, get on the bus, go somewhere for someone to teach you something. Now we have two main websites. One is called Google, the other is called YouTube. Between those two, you can do anything. Up to and you can learn anything up to and including brain surgery on YouTube. You can watch videos of doctors performing brain surgery on YouTube. So if the information is there and you're still broke, it's because you don't want to do what needs to be done to change your life. So I'm not looking for people who have what I call learned helplessness, where they sit back and wait for someone to provide programs, and it's a very passive way to live your life. Life needs to be lived actively. So what can you do with that high-speed internet? And go onto YouTube and find the lane and see how that lane is doing. And it could be in another geo. It could be somewhere in the States, could be somewhere in Europe, somewhere in the Caribbean, somewhere in Africa. Someone's doing something. You have that skill. You double down on putting some time and effort into learning what that is. And then you go out and see if the market where you are will monetize it. And by the way, the market where you are could be anywhere, because with the internet, you can
Thank you.
sell online and be anywhere. So you could be in Toronto selling things from the continent,
Yep.
anywhere in the Caribbean from Toronto, because the goods never have to come to Toronto. They can go from Africa directly to where they have to go. Drop shipping. So you have many different options to do these things. So when I sit down with someone, I do a financial needs analysis, and I see that they are not firing on all cylinders from an income perspective. I want to know what their motivation is, or lack thereof, for changing their lot in life. Because I see people out there want a don't spend a cent event and want to defer payments and doing all these things, but they're spending on things because they don't know the difference between mandatory spending, food, shelter, and then there's discretionary spending. Any vehicle beyond the most basic vehicle that's safe, reliable to get you to and from, any any moniker or brand beyond the basic brands is discretionary spending. Because last I checked, a Honda Civic will do the same as a 3 Series BMW here to Montreal. The difference may be safety, some amenities, the seats might be nicer, and so on, all discretionary. But if you want that BMW, you do not buy a 2023 BMW, you buy a 2018
Yeah.
BMW. Because last I checked, Google CarPlay and Apple Music and all the things were in that car as well. But the car's got a few miles on it, someone else has eaten the depreciation, and you have a luxury ride at a fairer price. never, ever, ever buy a new car, right?
Never.
And
This
all the
is
reasons are known, but I still see people getting new cars, unless you're going to lease a new car because you're in business and a lease makes sense. And you talk to your accountant, and your accountant says, listen, if you get this car, it's going to be an $850 expense, and Trudeau is going to take care of you if you buy this car through your business for your business. It makes sense. But when I see people who don't own businesses leasing cars because they want low payments, I know they're living a false lifestyle. So we need to look at spending. If you love Whole Foods, maybe you need not go Whole Foods, and maybe you need to go to the organic section of Walmart. Maybe you need to go to No Frills. Maybe you need to go to forget about Loblaw for a second and go to Superstore. Just make some different decisions, some changes there. If you see that certain produce is out of season and is super expensive, maybe you don't buy it. Buying mangoes in March is a little bit different than buying mangoes in July and August when they're in season.
true.
So you have to
True.
you have to look at seasonality. Sometimes I listen to this guy on 680 News when I'm on the road. He'll say, Dan McTagg, he says, listen, gas is going up 5 cents at midnight. Well, if you know you need gas and money's tight, you might want to get to the gas station before it goes up
Yeah.
5 cents, right? That's all I'm saying.
Yeah.
But why would you reward yourself with a Starbucks, right? So you say, I'm going to go save 5 cents on gas. I'm going to fill my tank. I'm going to reward myself with a Starbucks. And all the profit that you would have saved, all the money you would have saved by saving the gas,
God,
you just gave to Starbucks.
somebody else.
So when I do the analysis, I look at what's coming in and what's going out. And when you see, I've seen people spend more money on food and takeout than they're spending on their mortgage.
Okay, hold on a second. And this is another thing, and I'm not judging anybody here, but I would have thought by now people would have obviously during the pandemic takeout went up. But
Yes.
pandemic is post, and I still see people spending enormous amounts of money on takeout. And I love my food shows, and one of the reasons I love my food shows because I see the food costs versus the selling cost of
Yes.
things,
Yes.
and I'm going like I sometimes I want to ask some people, you paid this for this. Do you know how much it costs them to make it?
Oh yeah. Listen,
And I'm
there's
not judging people. I'm just putting it out there.
there's a chef that says I can buy one chicken for $10. I can make $150 on that chicken.
Yep.
Can I cut that chicken into different parts and sell it on a plate for $34? Right? Chicken for $34. People play it every day. You can go to any one of the major restaurants and they'll sit you down with a cloth napkin. This is how a little higher end, a cloth napkin, and you'll pay $25 to $35 for chicken all day. You know how many chicken you can buy, even if you went to Costco and bought the barbecue chicken that they have pre-cooked for $9.99. They have never changed the price. You know why? Because people have a psychological value system that says that chicken at Costco needs to be $9.99. I remember it 25 years ago at $9.99. 10 years ago it was $9.99. And today is $10.99. And Costco will not change the price, and they lose money on that chicken. But you know what happens? No one goes to Costco just for the chicken. When they leave that store, that cart is full
Oh
plus
my
that chicken.
gosh.
And Costco knows
No,
that.
it's in the industry. It's called a loss leader, and I don't even think
Correct.
they lose money on it. I don't even
Right.
think because the whole chicken doesn't cost them that much because
In,
they
in,
buy
in the
in
volume,
bulk
in the volume, in
anyways,
the volume they're buying.
in
Right.
the volume.
Exactly.
So they're even if someone goes in and buys that chicken,
Right.
Costco's still making money, and that's
Exactly.
a very few.
Exactly. So if people want takeout, right, they can do takeout, but rather than doing it Thursday, Friday, Saturday, Sunday, do it Friday, Saturday. That's a 50% savings. Rather than doing it, if you're doing it 3 days a week, do it 1 day a week and make it special. If you're drinking, I know people who are drinking every weekend from like the time Thursday night comes, they're drinking Thursday night, Friday night, Saturday, and Sunday. How about you cut that in half and just do it Saturday and Sunday,
How
and
are
you'll
they
save
still
money,
alive?
buddy. All the statistics that are coming out now about drinking and the adverse effects of alcohol, even minimal amounts is very scary because we were told for years and years that red wine was good for you, and these people here drink this thing all their lives and they're fine. Brain cells are dying with alcohol. Brain cells are dying with weed. I'm not a scientist, but you can find more and more reports letting us know that the things that we do for recreational, zoning out, alcohol or drugs, those things are causing long-term harm and psychotic behavior when we're older. So you're writing checks in your 20s and 30s and 40s that you're going to have to cash in your 70s, 80s, and 90s. And we'll see who is right down the road. So
We're gonna do.
spending, go ahead.
Let me just interrupt. We're gonna do a little bit of a reset here, and there's some comments here. So we're here hanging out with Wayne Harris on Financial First Fridays on the Morning Vibe. We're talking about the 5 areas of personal finance. If you want to get in touch with Wayne, here's all the information: Calendly link, Instagram, email. Also want to catch up on some comments here with some family. So let me just get to here. All right. So let's see. Let's go. Christopher Lawrence says, yes, leasing for business is a great business expense tagged with tax credit. Great point, Wayne. Tim Frey says, morning, everyone. I have a question. Well, I got an offline question for Tim, because I saw something yesterday. Did Tim do that? And it's a good thing, by the way. Dr. Tachi says, good morning, all. Dr. Tachi hosts that Mediascope thing on Wednesdays, 5 p.m. I haven't seen it for a little bit, but I know Dr. Tachi is launching a 24/7 online network in the next few months. And Dr. Vibe's going to have some content on it. Maybe some of these conversations will be on it. Okay. She also says, yes, this is a great convo. Absolutely. So we are caught up. So I think we're still on spending, I believe.
Yep. Then we're going to move on to saving.
All right.
So last point on spending, figure out what you must spend and then what you want to spend on. Reduce the want to spend on as close to zero as possible and work only on the mandatory. Yes, you need food. Yes, you need shelter. Yes, you need transportation. What's the least expensive way for you to do that? And do you need to go every day to Walmart, or can you go once a week? Do you need to go every week to Costco, or can you go once a month and get a freezer and fridge, another freezer and fridge, so you can store these things so you avoid doing that back and forth when gas is $1.40 a liter or whatever it is.
Also, too, people don't shy away from online bidding sites either. You can get some, like, I won't mention, but there's a store in Toronto that is having monthly great sales on appliances. And I know 2 individuals in my inner circle that have done very well in saving up on appliances. There's actually a very close associate of mine. He has a house in Jamaica that he's building, and it's cheaper for him to buy it at this offline store and ship it down there than to buy it in Jamaica.
Even with duty and taxes. Okay.
Even with duty and taxes. So if people who are in the GTHA, they want to know some more information about that store, contact me offline. I can give you the details. So let's move on to saving.
Right. So saving. So when you go to if you look at your bank account, regardless of which color bank you're with, blue, green, light blue, dark blue, burgundy, red, right? Whichever bank you're with, orange, take a look at what the savings rate they're giving you, right? What do you think the savings rate is for the typical saving account in Canada? What do you think it is?
1%.
1. That's high interest savings, buddy. What are you talking about?
Okay. 1%. 0.3.
0.3, 0.4, 0.5, depending on the bank. You might get some of the online banks that will give you a higher rate because they have less overhead, because they don't have all the branches and all the ATM machines and all these things to service. So they might be able to give you a higher rate. But here's the deal: saving is for tactical perspective. There's a tactical and a strategic perspective. You want to have savings for an emergency fund. And when I started in financial services, I was telling people 3 months is what you need. 3 months is what you need. Since the pandemic, you do not need 3 months of all your expenses. You need at least 6 months of all your expenses. So I want you to include your rent, your food, your car, your gas, your insurances, everything you're spending in a month. And we do an analysis of that. Once we have that number, multiply that by 6. And that should be in an account readily available for you to use it in case of a rainy day, and rainy days must come. So we want you to have savings. Right now, Canadians are saving very, very little of their money. After pent up not spending during the pandemic, people
There you
came out
go.
and went crazy. Right? They went crazy and started buying stuff because they're like, "Hey, life is short, eh? You could die tomorrow." And they started spending money like crazy, and they forgot about saving. You need to save at least 10% of your income, right? If you're going to pay, a cell phone company that rhymes with Dodgers, right? And you're going to pay another cell phone company that rhymes with well, you're going to pay these guys every month. You should pay yourself first
Yeah.
and make sure you're putting away money so your money can compound for you. The older you are, the more money is going to take for you to get there. The younger you are, the less money is going to take for you to get there. Tony Robbins would say, if you take $100 a month and you put it away at 18 years old at 8%, and you do that for 8 years and stop, when
Oh
you're
my
65,
gosh.
you're still going to be a millionaire.
Yep.
So I want people in their 20s who have student loans and they want to pop bottles. I see. Listen, when I was young, bottle service was a big deal. Now bottle service seems to be standard because all these kids live at home with their parents. I was on my own since 19, so I wasn't popping bottles in no club. If I went there, we would get lit up before, because in Montreal we have the dépanneur, the corner store. We go buy our case of beer from the dépanneur. We drink before we get to the club for $1 a beer, and then when we get to the club, we buy 1 or 2 Heineken, and that's it. We're good for the night. But people are doing $100, $200, $300 bottle service every weekend because they live at home and their parents are paying all the bills. So I want people to start saving some money. If you want to do bottle service, do it once a month and make it a special occasion. If you're going to do it at all in your 20s, because honest to God, you'll never get back that time in the market from your 20s as you get older. It's a one-way door. So if I can get you to give me some of that money, not all of it, so have fun, live life, but give me some of that money so I can put it into the appropriate buckets for you, short-term, medium-term, and long-term, at a rate of return that you are comfortable with. Then we can move you forward, and you know that you have a vacation bucket, you have a bottle service bucket, you have an entertainment bucket, but you also have a savings bucket, you have an investing bucket. Okay, this is the I want to buy my house bucket. You have all these buckets, and once that bucket for bottle service is empty, no more bottle service for you that month. You cannot take money from another bucket and put it in the bottle service bucket. You've already exhausted that bucket. Stop. Okay? So savings.
Okay.
I want people to start saving more. Go ahead.
Okay, let's continue on. So Dr. Tachi says they're going to start back Mediascope this coming Wednesday. Excellent. Ray says the best car to drive is the one that's fully paid for.
Yes and yes.
Divine Right says, agreed, Ray. Ray's on fire. It says, with decades of experience in lending, the biggest obstacle to many to qualifying for mortgages are due to auto loans and leases. A much bigger obstacle than credit score / rating, debt to income ratio.
Right.
Terry
So
Nicholson.
Go ahead.
Terry says, good morning, Terry. Fitness IQ Cam says 0.4%. And the Sorors are hanging out. Divine, good morning, Terry. Terry says, good morning, Serena, Divine Right. So back to you, my man.
Right. So all I want them to do is take a look at their savings account number and take 72 and divide it by their savings account percentage, and that will tell you how long it's going to take for your money to double. The rule of 72. So 72 divided by 0.4. I'll do it for you right now. It's pretty disgusting. Let's just do that quickly. So 72 divided by 0.04. Yeah, 1,800 years for your money to double. So unless you're Moses, I don't see $1 becoming $2 for you in this lifetime. Okay? Even if you're getting 1%, 72 divided by 1 is 72 years for your money to double. Some of the people on this call are in their 40s and 50s. We don't have that kind of time. So we need to get our money working as hard for us as we work for it. Okay? So let's move on to investing.
All right.
So when we're investing, and again in the Black community, we don't want to. I'm not going to say again the Black community is not monolithic. Some people are playing the stock market and the day trading. They're very comfortable with risk and they're covered with leverage, which means they're borrowing money to invest. When you're borrowing money to invest, there's certain tax advantages to
I
do
want
so.
to interrupt just for a second here. And I was listening to something the other day about the importance of having access to capital.
Hmm.
I don't know where that fits in our conversation today, but if and when you can address that, I'd love you to talk about it.
I'll address it right now. When times are good and everybody's making money, the market is driven by many things, but one is fear and the other is greed. So when people are greedy, you don't want to be in that market. You want to take your winnings and be cash ready for when people have fear. When people have fear, the market drops. When the market drops, good things become less expensive. So if you wanted to get into CN Rail or CP Rail or Tesla or Microsoft or Apple, when people
Now,
are in fear over the last 3 years, more fear than greed, there's a good time to be buying great companies at very fair prices. So access to capital means that when things are bad, when people have to renew 5-year mortgages and they got variable mortgages because mortgage rates were 1.55 and now their mortgage is 5.8, that's a 4.5% jump in the wrong direction for them. They're now bleeding. So now they have to qualify for this new mortgage and they're at 5%. They're like, I know I could afford this thing at 2, maybe 3, maybe 4, but almost 6%? I can't afford it. So if they can't afford it, they're going to want to do what? They're going to want to get out or they're going to want to rent it. I would prefer that they rent it because the asset will probably bounce back in terms of the costing and the market and all that. You know, I'm not Nostradamus, but it's unsustainable to keep it where it is for too much longer. But right now there are so many people who are doing Uber Eats and what a DoorDash and skip the dishes to pay their mortgages because their mortgages are extra $1,000 a month
mm-hmm,
or more,
mm-hmm,
right?
mm-hmm.
So when you have money, you have flexibility to allow you to go out. And I'm not saying being a predator, but you can go out and get things at a very good price. People who have these big time car leases and big time loans on different things might be a little more motivated to get rid of these things, so they can free up the ball and chain around their neck
Yeah.
called a debt. So if you have cash, you can walk in and say, I'll take it from here. I got it. You can leave, got it, no problem, because I have the cash to float this thing until interest rates come back
Good
down.
stuff.
So
Yeah,
right now, go ahead.
go ahead. No, well, I was just going to say with more freedom, more options.
100%. Anything that you have right now that is causing you debt, like big debt, like big high interest rate credit cards, or worse, payday loans, and these sort of things. All of those things you have to get rid of before you even talk to me about investing. We're going to do some investing because just the power of time in your favor. You still want to take advantage of. We're going to put some money into savings because we have to keep that discipline during good times or bad times. But it's hard for me to tell someone, hey, listen, you can make 6-7% on your return on this investment with me, but you're paying 19.9% on this credit card, 21.9% on that credit card, 32.9% on that payday loan. I have to try to show you a way to do both. I don't want you making your debtors more important than your family's future. So I want you to kill debt and invest at the same time. We need to be able to do both. Maybe the amount of investment you're going to do is going to be smaller, but we have to get rid of all the big debt. Before you buy anything new, people have to get rid of all that credit card debt. And I have multiple ways to get rid of people's debt. And we talked about that before. Snowball
Yeah.
and avalanche. They can Google it. Snowball procedure to look at the debt with the largest interest rate, or look at the debt with the largest balance, and focus on that debt. So if these debts are the highest interest rate, kill the highest interest rate debt first, or whichever one has the highest balance, kill the one with the highest balance first. Me, I like victories. I like fast victories. So I'll look at the one with the smallest balance. I don't care about the interest rate. Smallest balance, I'm all hands on deck. Minimum payments on everything else. The one with the smallest balance, hammer that one. Now that's gone. Pick the next one above that. minimum payments on everybody else, hammer that one until it's gone and keep going until the biggest one is done, because you're taking the money from the other ones that are paid off and now you're paying against a big one and you will be out of your debt in short order. Many ways to do it. But I
All right.
want people to go ahead.
I just interrupt. We're gonna at this rate, and we're gonna go into bonus time, and plus we have comments and questions. So I just want to
Okay.
make you aware.
Yeah.
So, okay. So Fitness IQ Camp says, I dislike the statement, quote, you can die tomorrow, unquote, and live until their 60s. People say that. Divine Right, good to know, Ray, about auto leases, loans when getting or considering the mortgage. Ray also says mortgage planning is key. Understanding previous rates and the rate fluctuation is imperative when making the home buying decision. And then Ray has a question for you. Wayne, what do you think is the bare minimum annual income for a retired couple who decides to stay in the GTHA or GTA? And what percentage of Afro-Caribbean folk will meet that income level?
Yeah. Wow. Great question. Let me tell you, it depends on which Caribbean people we're talking about. Some people are making good money and they're going to be just fine, but I can't see Toronto being less than 5 Gs. 5 Gs a month for food, for rent is about $5,300 now. So if you solve for inflation, what $5,300 a month is today, extrapolate that 10, 20, 30 years into the future, the buying power of just a little over $5,000 a month is going to be what people are going to need to be at zero in Toronto. Now, assuming you're mortgage free, so you own your place and you're mortgage free, you still have taxes to pay, you still have upkeep to pay, you still have groceries to pay, auto insurance, and so on and so forth. That question there, many people are answering, but you have to look at the demographic that you're talking about. 5 Gs a month might be more than enough money for some people who are living in certain parts of Toronto where rents are still below $2,000 a month and they're renting, right? But I've been doing a lot of locked-in retirement accounts as people are being packaged out of their companies or retiring. And when I see what these people have, I don't know how they're going to make it. Their Canada pension plan after taxes is $400 a month. Their old age security after taxes is $300 a month. They only got $150,000 from their locked-in retirement account. So even when I take that money and I run it so they can get a monthly payment on that, they're looking at less than $2,000 a month. Well, their rent is $1,800, and they can't get a penny more, and they're retired and they're tired. They're 67 years old. They have $2,000 coming in from all sources, and their rent is $1,800. You haven't eaten yet. You haven't put hydro. You don't have a cell phone. What are you going to do? So if you want to be able to live, people are going to have to decide that living in the most expensive city in the country might not be your jam. You might have to go live with your kids, or you might have to go consider wherever you came from and go back there. Not something a lot of people want to consider, because when you think about whatever island your parents are from or wherever you're from, that island, for people who come back, expats, when they come back, it's not what they left. I went to Barbados in 78. It was very quaint and very nice. I went in 88. It became very Americanized. I went in 2007. I didn't recognize it. I haven't been back since. Right? It's
Can imagine.
2007. People
Can
say,
imagine what it looks like now.
right.
Eh?
So I know it's changing, and it's changing because the economics are not in favor of the majority of the people. And when the economics are not in favor of the majority of the people, those people will find ways to find equity. And it's usually at the expense of those who are doing better than them. So
Okay.
bad things start to happen.
Some
So
more comments here.
go ahead.
Ray says, do not close cards once paid, as it will reduce the credit score. And
Right.
Roger Dundas says, I disagree with Wayne. The best option is to pay off debt with the highest interest rate first.
Yeah. So I'll deal with Ray first. Yes, do not close cards. I have a card that I got at Humber College in 1992. I still have that card because credit history is about 10% of your credit score. So when you pay off a card, to Ray's point, unless it has annual fees that are counterintuitive, see if the bank will allow you to keep your credit history and keep the history of the card. So if your card is a $50 a year fee or a $100 a year fee, but they have a no fee card and they'll allow you to keep the credit history on that new card, see if you can jump the fence and keep the old card. To Mr. Dundas' point, there's multiple ways to skin a cat. If for you, paying off the highest interest first makes sense, like I said, if it's predatory, like one of these payday loans, usually I try to go for those first. But if that's the highest balance, the person will not get the dopamine hit of seeing some success. If they have a bill and the bill is like $800 on one card and the card is at 19.9%, yes, the payday loan is killing them, right? But if I can satisfy the payday loan for 3 months and get rid of this card that's only an $800, $900 balance, then I can take what I was paying on that card and then go attack the payday. But I've got a victory at least. I got a victory in 1, 2, maybe 3 months. Now I feel good about the program I'm putting them in, and then they'll go take care of the payday loan. That may be $20,000, $30,000. I mean, take forever for them to get out of it. They're going to get there, and the difference in interest between them paying off this card in 3 months and not paying the payday loan versus just dealing with a payday loan, the payday loan may take 2-3 years. And this I just got them off the table in 2-3 months to give them a victory. So I'm not disagreeing with you. All I'm saying is if I see something that's small that they can get a victory, so they get excited about the program I'm putting them in, I will try to take that victory for them, if that makes sense.
Ray says we are seeing clients in their late 50s and early 60s with an average mortgage at around $300,000 or more. So retirement could be a significant challenge.
I agree with that statement. I'm seeing that as well. And what I'm seeing is not just the mortgages. I'm seeing the massive home equity lines of credit that they have, and those have balances as well. So these people need to consider what a lot of people are doing is maybe that house that you're living in is not the house for you. I'm not saying sell the house. I'm saying you might be able to get market rent for that house and go find someplace else to live that costs you less and help pay the mortgage. Or if you have a basement, that's your man cave. For a couple of $1,000s, I mean, I think it's like 8 or 10 for them to cut into the foundation of the house, add a separate entrance, get it zoned and permitted and all that, and you can go get your basement making you $2,000 a month rather than you just watching big games on Saturdays. You use the other rooms in your main level and the upper level, and you rent out that basement for anywhere between $1,500, $2,000, or even more per month, and have the basement as a cash machine for you. So seniors could do that as well. I'm not telling anybody who's lived in North York their whole life that they need to move to Windsor, Ontario, and lose all their friends. But if they're going to be in North York, we need to do the math and then show them a plan for how they can get income coming in rather than just money going out. So cash flow coming in rather than cash flowing out of your main principal residence, if that makes sense.
All right. Before that interruption, we were talking about investing. You finished investing and want to move on?
Yeah, let's go to protection. So protection, Ray's a mortgage guy, and he knows that there's creditor insurance where the bank wants you to have mortgage insurance where you're going to pay the premiums to basically cover the repayment of the mortgage to them. So you're basically paying the premium to satisfy the bank so they get their money if you should die before the mortgage is paid off. Good deal for the bank, not a good deal for you. Most of the underwriting in these creditor insurance policies, the underwriting is done after you pass. So if you pass from something that the bank doesn't like, the bank may not pay out. Whereas if you get a term policy or a decreasing term policy to cover the mortgage and all your other debts and expenses, you will satisfy by paying the bank off, paying off all your other debt, and you can usually do it for the same or less money. But a bank doesn't usually let you know about those things because creditor insurance is something that they offer as a quota on their people. So the people are selling this product. But if you were to ask anyone at the bank, do you have mortgage insurance? They're going to say, no, I don't. I sell it because I have to, but I don't have it for myself because it's not a great product. It's a great product for the bank, not a great product for the individual. So what we want to do is put you in position to have a term policy for the duration of the mortgage. You have a 30-year mortgage, get a 30-year term policy. You have a 25-year mortgage, get a 20-year term policy. You have 15 years left on the mortgage or 13 years left on the mortgage, you can get a 13-year term policy So when the policy ends, the mortgage is completed, and you will have your permanent insurance, which will be there for final arrangements and for estate planning. So it's a hybrid approach. Permanent insurance so that whenever you pass, and we all know we're going to pass, whenever you pass, the money will be there for you for your family to take care of final arrangements, final estate taxes, probate, all those things done. That money will always be there. So it's a permanent policy. A temporary policy is something you're going to do to add a lot of insurance for a low price for a period of time, maybe to get the kids to adulthood, get the kids out of university, pay off mortgage or mortgages. Because what happens, and I'm not an accountant, but if you have multiple properties and you pass away, they look at what you bought the property for versus what the property is appraised for, and you have to pay capital gains on the difference when you die. So you got a great deal on the house on the Danforth for $150. That property is now worth $1.5 million, and you die, and it's not your principal residence. The government is saying you have a capital gain between $150 and $1.5 million. You need to pay capital gains taxes on that money. 50% of that money is yours. The other 50% is taxed at your marginal tax bracket. That could be a $400,000 hit,
Ouch.
a $200,000 hit. So your kids or beneficiaries go, we don't have the money for that. Now we have to go out and get a mortgage, but we have mortgages, we don't qualify for this mortgage, so now we have to sell the house. Or you have term policies for all the exposure of your secondary properties. And then that policy will wipe out the mortgage. You're going to have multiple mortgage-free properties across wherever you have that jurisdiction of the property. So people have property in the Caribbean, whatever. I'm not going to get an insurance policy in Jamaican dollars because I don't know what the inflation in Jamaica is going to be. I kind of know what the inflation is going to be in Canada. It's going to be between 2 and 8%, as we can see right now. I don't know what it's going to be in Jamaica. It might be double-digit inflation in Jamaica over the next 10, 20 years. And I'm just using Jamaica as an example, the same thing in Barbados and any other island. So what I do is I get my policies here in Canadian currency and do my thing. Now, Ray does business in Canada, United States, and the Caribbean. So maybe you might get a policy for those U.S. properties, get U.S. policies so that it pays in U.S. dollars to take care of the U.S. exposures that you have in the United States. But I would always want to have U.S. dollars or Canadian dollar policies for any geography that has a dollar that's worth less than mine. So to Caribbean, the dollar is worth less than mine. Canadian policy, good to go. U.S. policy, good to go. If you have the ability to get U.S. policies because you have assets in the United States, and then use that in the Caribbean because it's going to pay out tax-free in both of these countries.
Okay, just to catch up, Roger says ultimately it's going to cost you more, victory aside.
Mm-hmm.
And
Agreed.
then Ray says asset and liability protection insurance is something that is seriously lacking in Afro and Caribbean populations. Education and understanding is critical.
Yeah, listen, everyone still believes that it's not going to happen to them. Last person who got out of here alive was Jesus. That's last I checked. So everybody, like Floyd Mayweather, death is undefeated. So if death is undefeated, then we in the Afro-Caribbean community need to prepare for it. Listen, having insurance is better than not having insurance. What type of insurance you should have is dependent on your strategy and what you want to do. Do you want to leave your kids with debt? Then have a term policy so that when 20 years, 30 years, 40-year term, there's even term 100. It'll pay for 100 years. There's going to be no cash value there. And if you die, your beneficiaries don't get the money. But there are policies that you can use as collateral, and you can use the money in the policies while you're alive, and it will pay out when you're gone. So it satisfies both. And when you talk about the infinite banking and you being your own private bank and all these sort of things you're hearing on social media, there are policies, permanent policies that will do that for you. And there's a way to fund them, especially for businesses, that they can use these policies to create their own personal pensions. So think about all these businesses that are out there. Rather than having the policies in their personal hand, they can have the policies owned by the business. And again, talk to your accountant, but there are ways to put that money into the policy for X number of years. And then when you get into retirement years, have the policy pay you out by the drip, tax-free money until you pass. And when you pass, they say, this is what you borrowed. This is the interest rate. Pay us that back. The rest goes to your family. So you kill multiple birds with one stone. You get an income while you're alive. You pay no taxes, and your family gets the death benefit and whatever cash is left over after you pay back the collateral loan or the policy loan at the end of your life. Everybody wins. It's a strategy that's not being used in the Black community to the degree that it should be. And I think that with people like Ray and Roger Dundas, who knows every Black business in Canada and maybe some in the United States and the Caribbean, if we brought those folks to the table, we could have a conversation to show them how they can leverage some of these insurance strategies to help their businesses and protect themselves, their partners, and their family. Because imagine, Ed, you own the Dr. Vibe show and you have a partner in Dr. Vibe, and your partner passes away. Well, the spouse comes in and says, okay, so we're going to change the Dr. Vibe show to the Dr. Live show because I have 50%, just like my spouse had 50%. So I have his 50%. So I want everything to go from purple and blue to pink and green. And you have no recourse. Or you can just cut a check and buy their end and own 100% of it by having the policy. So it's called key person insurance. So we can do that for the key people in your business, directors of your company.
All right. Divine Right says, I truly talk to people about insurance and to please get some and not the one attached to your job. We have learned through my family from those who let their insurance lapse or not have it at all.
Yes, she's speaking the truth. I will say this. When you have a term policy, a temporary policy, you have 30 days to get that money in that account, right? Some companies might give you, as Jamaicans will say, a bly and give you a little bit longer. But for the most part, you have 30 days because there's no cash in the policy. So when the policy lapses, they're like, are you done? I'm going to send you a letter. And people move and don't update their insurer and whatnot. And then the policy lapses and they say, well, the insurance teeth my money. Why? Because now I've had a 30-year policy for 10 years. I bought it when I was 31. Now I'm 41. It lapsed. Now when I want to renew, I have to renew at 41, not at 31. And I'm older. And I have to do a medical and all these other things where I wouldn't have had to do that if I had kept it going. So when you have a term policy, make sure you pay your premiums. You do not have to pay your premiums monthly. You can pay them quarterly. You can pay them semi-annually. You can pay them annually. You can pay multiple years up front. There's many ways to do it. So if you know you're going to be volatile and all over the place moving and letters are coming to places you no longer live because you're not stable, maybe you pay it annually. And just know that at least once a year you're gonna get it covered. The second thing I want to talk about is when you have enough cash value in a policy, you can take premium holidays, and the cash from the policy will pay the premium on your behalf. So you lose your job. COVID, we saw a lot of this going on. The insurance companies were allowing you to defer payments, and they were allowing you to use your policy if you had enough cash to pay the premiums on your behalf. So many ways to skin that cat. All they have to do is reach out to me and I'll show them what's available to them, whether the policy is with the company I support or not.
Do you have one more of the 5 to cover?
Nope. Income done, spending done, saving done, investing done, protection done.
What? That was a Fast and Furious. That was a Fast and Furious time, man. I thought, did he cover it? Plus questions?
Yes.
What?
Yeah, the fam came in hot and heavy, and I appreciate it 100%.
Absolutely. Before we let you go, you've dropped a lot of knowledge bombs as usual. What are some of your biggest concerns when it comes to finances for people who look like us? 2 or 3 big concerns.
First concern is a lack of understanding. There's an ignorance around financial literacy. People have financial literacy concepts based on where they came from, based on their parents, and may not be up to date with what's available in 2023. So we need to bridge the gap on education. I think that if I'm going to be putting time anywhere, it's going to be in educating our people and everybody, really, not just our people, but everybody about what is available. And then the next thing, because I'm licensed, is what's available for them. So this is what's possible. And now this is what's possible, this is what's possible for you. And that's the key. Because understanding all these concepts and not knowing how to relate them to your own situation is a challenge. So what is it that I can do of what's available out there for you? So that's one, education and awareness. Then two, let's optimize your spending. So what are you spending on, right? Starbucks a day keeps wealth away, right? So let's get me a Nescafe, an espresso or whatever, and stop that and buy that for at home rather than buying Starbucks every day. Little modification. I'm not saying do not reward yourself with a Starbucks or a Tim Hortons or whatever a couple of times a week, but if you're doing it 5 days a week, maybe do it 3. Monday, Wednesday, Friday, right? If you're going to eat lunch out in the food courts of the big buildings downtown, maybe don't do it 5 days a week. Maybe do it 3 days a week or 2 days a week. And you'll find the money to go do other things. Usually it's not that people are broke, it's that people are spending the money in the areas that they don't get any return on that spending. They're spending in the wrong areas. You got an $850 BMW, and the BMW is 10 years old. $850 a month because you want to drive a 3 Series or a 4 Series or a 5 Series when you should be driving a Subaru, right? Now, if you're too deep and it's too far and there's nothing I can do, there's nothing I can do. But if you can reduce your costs and still get it done, this is what we're going to try to do. And then the other thing I'm looking at now for people is side hustle, side hustle, side hustle. Rather than just working on the expense side and trying to reduce expenses, we need to do those things. But let's look at upside, upside, upside. What can we do to generate some income? And preferably generate income when we're not physically there to generate the income. So I want the money coming in whether I'm there or not, which is why people love real estate, because once you go with Ray and Ray sets you up as a multi-tenanted unit and he fills it with tenants and a property manager is running it, this is a cash flowing positive asset that you physically do not have to be there for the income to come in. And that's his superpower. So what do I need to do? I need to feed Ray clients that have bad credit, fix the credit. Clients who don't have down payments, help them get a down payment, and then hand them to Ray and let Ray go do his thing. If there's a realtor on here, I'll do the same thing for your clients. Get all the people you rejected, all the people who didn't have the right credit, who didn't have the down payment, who didn't have the track record with income. Let me work with them as an advisor. Get them to the point where they're ready. Hand them back to you so you can go do what you do. And we work together symbiotically.
Cooperative economics.
Cooperative, yeah. I agree. All day.
All right. Well, as always, thanks for taking the time out of your positive, productive schedule. Financial First Fridays is going strong. And make sure you avoid the snow tonight.
Yes. I'm a shout out to my father who's still here, by the way.
Yes. We have to finish. Father's still here. Good stuff. Good stuff.
Here.
So just some final comments. Divine Right claps hands. Terry, great conversation. Christopher Lawrence, great show. He also says, have a great weekend in advance, Dr. Vibe and Wayne Harris.
Thank you.
Fitness IQ Cam says, great conversation. Definitely have to rewatch this. And Ray says, great summation and wrap up, Wayne.
Thank you all. Thank you all.
Some other thing here. Divine Red says, yes, thank you, Wayne! Exclamation points. All right. My brother, I will let you go for your weekend and we will talk. Thanks again.
You're welcome. Have a great week and a great month.
All right, everybody. Epic conversation. And I thought Wayne wouldn't have finished, and he got it pretty much done in an hour. And I went, what? I'm going, yeah, it was good. It was really good. And Divine Red says to Ray, amen. Glad your father is doing well, praying. Excellent. Fantastic. There's his contact information. So let's wrap it up for this week and let's make it happen here. So let's do this. All right. So as always, just as we close out, if you want to subscribe to the show, best place to do it is on YouTube. And when you do it on YouTube, subscribe and hit the notification bell. We'll tell you when upcoming conversations are happening. You can like the show, like the Dr. Vibe show on Facebook. Wherever you're watching it, like it, subscribe, etc. Would you like to promote your business or service on the show? Contact me at dr.vibe at the drvibeshow.com. And you can watch replays of the Morning Vibe at all the places that are scrolling along in the bottom. So the Dr. Vibe Show on YouTube, Facebook, LinkedIn. Actually, the Morning Vibe. Yes, the Morning Vibe Show. Yes. And also ACBN, Facebook, YouTube, and Ryan O'Neill Knight on YouTube. All right. So we're going to close it down here. And we just got a few more quick comments. So let's see. Divine Right says Ray, Fitnance, Roger, etc. All in one show. Yes, all in. Are you saying you want them all on one show? Okay, maybe that's what you're saying. And then Dr. Tachi, this was a great show. Thank you both. Thank you, Dr. Tachi. We are patiently awaiting for the launch of your network. Patiently awaiting. So as always, we close out this like this. Live your life as a dream. If you can dream it, you can make it. Sometimes you have to get small to get stronger. Block assumptions, then aim bigger, aim better, aim higher, aim wider. Love, faith, and respect. Remember to give yourselves grace and don't just manage your time, manage your energy. We will see you on Monday. And whatever happens on Monday, it's going to be good. But again, thank you for your continued support. Please share it out. Please tell other people about it. And that's the weekend. Let's go make it happen. See you on Monday. Be well and keep the faith.